Nvidia up by about 1.5% pre-market. Two firms raising their price targets yesterday on demand for the Blackwell AI chip. Joining us now is another analyst who is also bullish on the stock, Vivek Arya, Bank of America Securities Senior Semiconductors Analyst. Vivek, great to have you with us.
Good morning, Melissa.
I was reading your note from just a couple weeks ago, or last week. It could be. It's saying that Nvidia is relatively under-owned, which I thought was really surprising. The assumption is that the Mag 7, particularly Nvidia, is probably the most owned trade on Wall Street. What have you found?
Sure. Thanks, Melissa. I think the first thing to realize is that we just went through what is probably just phase one of large language model deployment. Now we are going to start phase two. That's when we will see a lot more optimized models, both getting larger in scope to increase their accuracy, but then also getting a lot smaller and optimized. And that requires a very flexible set of hardware, software, silicon. And that is, I think, the ecosystem NVIDIA is pioneered and created. And they are just at the start of their Gen 2 product, Blackwell, which will really start to kickstart this phase two of AI. So I think that's very important to realize that even though the numbers have gotten very big, we are still at the start of this deployment phase. When it comes to ownership, what our strategy team, led by Savita, have found out is that if you take a snapshot of active long-only fund managers across the U.S., that yes, a lot of them own NVIDIA, but the weightage with which they own NVIDIA stock relative to its weight in the S&P 500 is essentially just market weight, right? So even though it is one of the fastest growing stocks in our coverage and across technology, it's not actually among the largest holdings in a number of actively managed funds. So we do think there is scope for both a better earnings upside and, of course, a lot more weighting in investor portfolios.
Upon the robust demand of Nvidia's next-generation Blackwell GPUs, the Switzerland-based financial company and investment bank UBS has decided to join the independent Wall Street firm Wolfe and raise its price target on Nvidia, showcasing a solid confidence in the firm's performance in the upcoming quarters, despite many analysts doubting Nvidia's capability in maintaining such a very high-level performance and pace. So, why did UBS raise its price target on Nvidia? That's what we will find out in today's video, and we'll also talk about whether Nvidia stock is a buy or not at its current price. But before we get into today's video, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
How do you see Nvidia trading for the remainder of the year in that in the first half of the year, it was all about this massive CapEx spending raised by the hyperscalers. That was a huge boost to the AI trade in Nvidia in particular. And then you had Jensen Huang in the last earnings, raising Q2 guidance on the old chip, but also saying that there's going to be plenty of Blackwell revenue for the rest of the year. So they seem to be raising their own bar. What else do you want to hear in order to sort of keep this story going?
Sure. So today, the most reliable spender on the planet is the U.S. cloud customer, right? They are in a race to deploy these large language models. They have just gotten started. And it's interesting that if you double click on that, the most useful models that are out there, one has been developed by a startup, right, OpenAI, and the other has been developed by a company, Meta, which is not even a cloud service provider. So that's why I think it's interesting to see when people try and predict the peak of this cycle, when some of the largest technology companies on the planet don't even have a large language model that is rolled out and is being adopted in full scale. So that's point number one. I think point number two is that the demand which started from the cloud providers, I think will slowly start to expand into enterprises. There are a number of enterprises across a number of verticals, whether it's healthcare, whether it's financial services, transportation, retail. They also want to extract insights from all the data that they have. And a lot of times they want to do it on premise. And number three, look at the demand that is just starting from all the sovereign countries, right? Each one who wants to have their own set of large language models that are optimized for their own language, their own culture. So because of the diversity of demand is why we think the diversity of needs across NVIDIA's product stack, whether it's Ampere, whether it's Hopper, and now it's Blackwell. So that I think is the key, that the demand is a lot more diverse. and that is why you need a diversity on the product stack to address it.
UBS has decided recently to raise its price target on Nvidia's stock from $120 to $150 per share in a note released in the past few days, representing a potential upside of 17% from current levels. The renowned UBS analyst Timothy R. Curie said that the demand momentum for the Blackwell rack-scale systems remains exceedingly robust, according to his research on supply chains. He also continued by saying that they now believe earnings per share rating of $5 could be doable in 2025, as the order pipeline for the NVL 7236 systems is materially larger than just 2 months ago, as hyperscaler budgets for year 2025 firm up, which basically means that due to the increased demand for Nvidia's products and the finalized budgets of major tech companies, reaching such earnings per share rating in 2025 seems possible. And that's what distinguishes R. Curie's estimates the most from the rest of Wall Street, as analysts predict that Nvidia will earn $3.62 per share in 2025, and the stock is priced at 35 times those expected earnings. Additionally, R. Curie stated that given all of this, they believe a $150 price target can be supported, and they maintain their buy rating as they roll their valuation basis forward from 2025 earnings per share to an average of 2025 and 2026. Although there have been rising concerns regarding Nvidia's stock, these concerns might actually end up benefiting Nvidia due to their solid performance, which has managed to maintain strong earnings throughout the year. The analysts even expect that those who were bearish may change their outlook to bullish, and this shift can gradually drive the stock price higher. So, is UBS's statement really a surprise, especially as many analysts were already doubting Nvidia's future growth potential? Let's find out. Hello, everyone, and welcome back to Investocracy.
Yeah, understood. You know, this group has done particularly well. To your point, it wasn't that long ago that we didn't have any trillion-dollar companies, and now we're talking about $3 and $4 trillion companies. You know, Will, how do you feel about the group? You know, how did you feel then? Did you love tech? Are you feeling any changes on the group at all?
I think the big lesson for this year is similar to what Michael is saying is, you know, stick with what's working. And big tech, the reality is this is what's been working, not just this year, but I go back, you know, many years now, absent 2022, when, you know, the Fed sort of repriced all stocks in the market. But we go back before then, and, you know, we were still talking about the largest tech companies in the world, albeit under the acronym of FANGs instead of Magnificent Seven today. So I think in this interest rate environment, large cap tech seems to be the place that is immune from interest rate and anything to do with inflation. That's why smaller companies have struggled in this particular environment. But the earnings have been good. There's no reason to expect that that won't or that will change during this earnings season. So stick with what's working.
UBS's optimism isn't out of the blue, because in fact, Nvidia has been the strongest performer in the market this year. Bearing in mind that Nvidia's stock has gone up a staggering 167% so far this year, they've established themselves as the leader of this year's artificial intelligence mania. And since the start of 2023, Nvidia has gone up by more than 760%. In case Nvidia maintains the same incredible performance with the same rocket speed, and once it widens its supply capacities, the only obstacle that is stopping Nvidia's revenues and profits from breaking higher records, the stock will definitely soar even higher in the upcoming quarters. With strong earnings figures to boot and strong future growth expectations, the chipmaker briefly surpassed even the likes of Microsoft and Apple in terms of market capitalization this year. And since its 10-for-1 stock split on June 7th, Nvidia has only continued to soar. Shares have gone up by nearly 6% in the past month of June only. And at the moment, investors are eagerly awaiting the company's upcoming quarterly earnings report, which is expected to be released next month on the 28th of August. And if the report shows solid earnings, this can act as a very powerful catalyst in raising the stock's price. A perfect example is the first quarter of this year, when Nvidia's earning report showcased a record revenue of $26 billion, marking an 18% increase quarter over quarter and 262% year over year. So, the price target increase is a very strong indication of the market's continuous bullishness on Nvidia and its solid confidence in its ability to keep beating the sky-high estimates and doubts. So, what does this mean for Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Next week, we have Netflix, Taiwan Semi, a ton of quarterly results. We'll be kicking them off. I mean, we'll start with the banks this Friday, and mega cap techs are on their way to you folks. You want to know what to watch for this as the NASDAQ 100 is hitting new highs today. Let's bring in our panel to discuss this. Michael Robinson, Chief Technology Strategist at Weiss Ratings, and Will Ryan, Founder, CEO at Granite Shares. Thank you both for being with us. Michael, you know, it was interesting because you said that you were bullish, but a little more selective these days, right?
Yes, it's a top-heavy market. I just want to take a moment to appreciate one fact. On August 2nd, we're 3 weeks away from a watershed moment in stock market and technology history, and that's when Apple hit $1 trillion valuation. And today, the top 5 tech firms are worth almost $15 trillion, which would make it the 3rd largest economy in the world. So it's become a very top-heavy market. And in there, I mean, we know for a fact it's a tech-centric economy. AI is going to change everything. You just need to be a little bit more selective because small and mid caps are not doing as well as the mega cap and large firms in general. Just as a quick stat, Nvidia accounted for 30% of the S&P's gains in the first half of the year, and whereas the average stocks in that index gained 4.1%. So that's the largest discrepancy since 1990. But there's no reason to be afraid. Just put in a little bit smaller amounts in these. We're setting all these record highs, but be very, very selective. Go for the stocks that you really think have a great long-term appeal with superior earnings growth and a track record of beating the market.
Analysts predict Nvidia's GPU usage could increase over 50% by 2025, signaling greater integration of their technology across devices, data centers, gaming, AI, and more. This expanded Nvidia presence bodes well for the company's future. The surging AI market, estimated to reach beyond $184 billion in 2024 and racing to over $826 billion by 2030, also stands to benefit Nvidia as long as demand for their AI chips persists. Near-term expectations for Nvidia are similarly positive. Their second quarter of 2025 revenue outlook calls for around $28 billion with GAAP and non-GAAP gross margins of 74.8% and 75.5% respectively, plus or minus 50 basis points. Also, full-year gross margins are expected in the mid-70% range. With Nvidia approaching these projected milestones, their stock presents a compelling buy opportunity at present. Historical growth awaits the company across sectors like gaming, data centers, and AI. But what do you think about Nvidia's stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.